Hello guys, welcome to the Train Parrot. New things are developing in the market and we are kind of seeing a U-turn since we started hearing about BlackRock filing for a new Bitcoin ETF. That is already having big changes in most of the indicators. As usual with crypto, things change overnight, so we have to do our homework and have a look at the liquidity, moving average, CPR monthly, liquidity, high block capital, and all these things to stay ahead of the game. This current move is pretty much exponential, at least on the 1 hour time frame. We're going to look into where is the point where that's going to break, potential pullbacks for re-entry, and of course, is this sustainable? We're going to cover indexes, my take on Total 3 and the Altcoin market. Open interest is giving really great alphas recently. I'm going to share my thoughts on open interest. Areas of support and resistance. On the weekly, things are looking healthy, although we are against resistance. It's a great Saturday for the market and most of the tokens have recovered. The altcoin season has increased to 20, and yeah, we pinch on the 50% Bitcoin dominance. We could be heading towards a CME gap, but be aware that we are probably forming one this weekend. I'm also gonna cover the high-level picture of the market, how we are evolving, EMA rhythm, in what stage of Wyckoff we are. I'll update you on the most important patterns, including the Gaussian channel, what is the next toughest level that we need to conquer from CPR monthly perspective, and how the 1 hour time frame is weakening. And as usual, we're gonna cover the liquidity, how many shorts and longs there are currently. Let's have a look at the order book, the liquidity, and all the levels in general. Guys, if you like these daily updates, make sure that you're subscribed to the channel, hit the notification bell, smash the like, hit the like, and the best thing that you can do for this channel that keeps me making daily videos are your comments. I read them all, I try to reply them all, so make sure that you keep adding comments every day. I really appreciate it. Let's get to the content. So in regards to the head and shoulders, I still think that is in play as long as we don't break the neckline with this dotted yellow line. Once we get above there, I call this area the invalidation zone. The target for the head and shoulders is 23K. As you can see, we haven't invalidated that, even though this movement, it is bullish. It broke from this pattern and it's re-entering in this area of interest formed by this triangle. I think this is all caused by the expectations from people that BlackRock is going to put out an ETF with spot BTC. They have never failed to deliver except for only once out of hundreds of applications that they have done, which is really great. People were definitely looking for an excuse to get the crypto market back into bullish mode since all the other indexes have been going up and Bitcoin is completely diverting. Now with the expectation that BlackRock is interested in crypto, is turning people's head back into crypto and thinking, oh, wait a minute, maybe I should also invest in Bitcoin. And of course, people are scared that BlackRock is going to deploy millions and millions into the crypto space, completely owning the domain, and then you're not going to be able to buy a one coin ever again. Anyways, let's look a little bit more into detail what's been happening yesterday. I entered at 25K and in my last video I say I was gonna exit around here at the 25.5, which I actually did. Since then there's been a few more signals. This one is from VIX SPY. That was very well timed. It was right after this move of almost 4%. This whole move is exponential. It's retesting now the curve. We are above the area of maximum volume and the point of control. In order to have a continuation, we should not re-enter this range. At least that's what Wyckoff will have said, because if you enter this area, you do a full trip back to where you came from. Everything goes back into the mean, and that's the highest likely scenario. Of course, we can still do a continuation. There is liquidity to the upside. We're gonna look into that. But in my opinion, a retest will make this much more sustainable. Expect some profit taken over the weekend. The DXY closed the week at 102.2. Massive red candle here. As we approach the 101, I would like to see some acceleration and then breaking this below. At least that is my wish. I hope we don't get something similar to here, where we started slowing down and then eventually making another move to the upside. Traditional markets, Nasdaq and S&P are all up. VIX was making big news, being at 13. It's extremely low historically. Once the VIX finds a local bottom, like here and here and here, and this is actually extremely low, that usually signals a move to the upside, which also comes with a spike in the volatility. It's not guaranteed, but don't be surprised to see another big push of the volatility. Not all these volatility moves are to the upside. Some of them are events related to capitulation and some of them blow off tops. In the past video I was mentioning I was worried with breaking this level of support on total 3. We're still holding it. If you're using open interest filter, my free indicator, you should probably be celebrating by now, because every time that we have in the 4-hour too many shorts, Bitcoin is pushing to the upside and liquidating all of them. All you have to do is look at this indicator and pair it with a couple more indications, and you got very good entries, at least for Bitcoin. Breaking Point has been nailing it for months. Almost every single signal is an amazing entry. Again, another free indicator. Hit the like and write down in the comments if you're using it. I really want to know how many people are using this indicator. The daily turned into support and we broke this downward sloping resistance, and we seem to be heading to 27.4, which is the next level of resistance. Now we can see this as a deviation, hopefully, which means that we enter into the range and we can make it all the way to the top of the range. At least that is what has the highest likelihood. Let's do a catch up on the weekly RSI. We can see that we are against resistance. I draw the levels of the red line support here, RSI, which are represented by this band that we say that we need to hold at all costs, which we are doing currently on the weekly. Let's see how we close on Sunday. If we are still above 25.5, we are perfectly holding this level. The most bullish scenario will be to see a breakout here. So if you see that the weekly has closed above this yellow line by Sunday, that will be massively bullish. But I'm telling you, massively. Probably the biggest alpha that you're ever gonna get from the Trading Parrot channel. And oh yeah, the week looks very good. On the day we're also having bullish moves. The month we haven't recovered yet, which reminds us that we are very oversold. But every time that you want to FOMO in alts at this point, remember that it's high likely that we are in a strong Bitcoin season, which means all altcoins should bleed against Bitcoin. So think twice before taking high risk with alts. And remember this chart, if we break it below, that is going to cause a lot of damage to all the people that are entering this week. Be very careful. Let's have a quick look at what is doing well in Lunar Crash. Quant definitely is making a big move. Aptos, Solana, FXS, Injective, Algorand, Matic, and Gala. Oh, Render is back as well. And Capo. What the hell is that? I always laugh every time I see this token. Fear and Greed Index is at 47. And if we look at the long-term chart, we can see that we are holding there at 47, precisely where we say a couple of days ago that we must hold this structure in order to do a continuation into the greed area. We're still in Bitcoin season at number 20. It's Bitcoin season until 25. And we can see in the past 90 days, these are the only coins that are outperforming Bitcoin. Render, BGB from BitGet, XRP, TRX, and Leo. Of course, BGB is doing really well because they are offering non-KYC accounts with leverage, futures in US, and people are fleeing from other exchanges trying to find something they can use to trade. In terms of CME gaps, we still have the 27.9. It's very thin, but I wouldn't be surprised if we feel it, because that's what happens most of the times when you have a CME gap. Keep a close eye, because on Friday, we ended up closing at 26.4, which means that if over the weekend we make a move, let's say all of this whole block will become a CME gap. The market opens again on Monday. We will be tracking any CME gaps. We'll let you know on Twitter. So make sure that you're following me On Twitter, the handle is Trading Parrot. And don't forget to subscribe this channel. Some of the information I'm sharing is not available anywhere else in YouTube. The good news from the macro perspective is we are regaining above the 100 EMA. We are still not above the MA, but it's work in progress. The green Fibonacci level ended up being the level that provided the support for this to make a move to the upside. Hopefully it's not going to be the same outcome as the orange one that made it to the red and then came back to the next level in the stairs. If we did that, we will go back to 24.6. And if we made a big move to the downside like here where we went to 19K, that will be around 23.5. As you can see with these Fibonacci levels, the same levels are getting higher and higher. The EMA ribbon weekly is looking beautiful, not as big as this hanging man candle that we had in March, but still very bullish. It's a green candle and there is a wick right below the EMA ribbon. So closing the weekend, closing on Sunday like this will be the perfect picture and looking really great for an entry. In terms of these ranges, being able to hold there will increase the chances that we make another move to the top of the range. We were looking at these levels, we held it for a bit, we fake out to the downside, and now we are above it. So it feels a little bit scary to say it, but this is signaling that we should be going towards the top of the range, which is located pretty much at 34K. I don't believe it myself, don't blame the messenger, but this is what TA is saying. The Gaussian channel on the weekly is still not flipping in green. Let's go to 2015. You can see that we tested the middle line and then we make a move to the upside. In 2019, we have COVID, so it was a pretty weird scenario, but we are doing something very similar to 2015. We are holding the middle line, and if we drop the time frame to 6 days, we are still red. If we drop it to 5 days, we are already in the green. So that's like a sneak peek of what it could be coming for the actual weekly Gaussian channel. And once it flips into green, it's party for everybody. It's just bull market. If you're looking for a new exchange, have a look at OKX. It's my favorite exchange right now. And if you want to get a discount, just write down Parrot in the referral code. You're going to get immediately 20% discounted. You're going to be supporting the channel. And don't forget that in the description, there are instructions to use the volume that you trade in OKX to get a free account in TTP. In terms of monthly CPI, it also seemed like a fake out below the first support and heading back up to the pivots. We're also about to confront the confluence with this downward sloping resistance. So 27.3 to 27.8, pretty much where the CME gap is going to become a very strong level of resistance. All eyes in this area around here. But for the short term, the 1 hour is losing momentum. We can see that there's 31 minutes for the candle to close. Closing here after so many touches in the RSI, it's calling for a pullback. And since this whole move has been pretty much an exponential one, this is definitely calling for a short. And maybe that is going to provide an opportunity for spot holders to have a better entry. If this comes anywhere between 54 to 45 in the RSI on the 4 hour, that might be a great entry, assuming that we're going to do a continuation to the upside. Liquidity, fair value gaps. Now we have liquidity to the downside from 26.1 until 25.7. That could be the perfect argument for the RSI to grab it and for the 4 hour to find a confirmation. Longs keep increasing their positions. Shorts, yes, but very mildly. Overall, if we divide longs by shorts, the longs are definitely taking the lead, at least on the daily time frame. I'm using here materialindicators.com, their chart, fire charts, which is phenomenal. And at 27K, 27.5 and 28, all the round numbers to the upside are packed with liquidity. To the downside to 24.5 and pretty much 24. And this week I tweet precisely here at 9 a.m. on the 15th that we were having a bullish divergence on the 4 hour. A few hours after, we started having this pump, and I hope you didn't miss it, but that was published on Twitter. You can go check it out and subscribe if you like information like this. for free on Twitter. Let's have a look at the liquidity from high block capital. And here's the thing, we are leaving behind loads of liquidity to the downside, at least from the 3 months accumulation, and to the upside, it's pretty far located. In the 1 month, we have the biggest liquidity located at 28.1. That coincides by $200 with the CME gap. And the delta, now it's the opposite as on Friday. So we were 10 billions to the downside, now we're 10 billions to the upside, meaning that the longs are the ones that are risking the most. So read that as, well, they are risking to get liquidated by a move to the downside. All right, guys, I hope you enjoy this update on a Saturday. We'll really appreciate if you hit the like, subscribe with notification bell, and leave me any comment, which is the only way that you can really boost the amounts of views that we are getting, at least until we get a proper bull market. All right, thanks so much for watching. Take care. Bye-bye.